Online stock investing for beginners. Start strong. Welcome to Online Stock Investing for Beginners. Start strong. If you've ever been curious about growing your wealth through stocks but felt unsure where to start, you're in the right place. This guide is specifically designed to help beginners understand the world of stock investing in a straightforward and approachable way. By the end of this video, you'll feel confident and motivated to take that first step toward building your financial future. Let's dive in. Stock investing is simply buying pieces of a company, called shares, with the hope that their value will grow over time, allowing you to sell them for a profit or earn returns through dividends. Online stock investing has made this process more accessible than ever. With platforms allowing you to invest right from your smartphone or laptop, anyone can participate in the stock market. Whether you're saving for a dream vacation, your child's education, or retirement, online investing opens up exciting opportunities for all. Why do so many people flock to stocks? Because it's a proven way to grow wealth. Stocks tend to offer higher returns compared to traditional savings accounts or bonds over the long term, making them an important tool for building your financial future. Historically, the stock market grows over time despite occasional drops. This growth allows people to benefit from the magic of compounding, where small investments made consistently build into substantial amounts. Whether you're starting with $50 or $500, it's a step toward financial growth. Let's clear up a few myths about stock investing right away. Investing is like gambling. Not true. Gambling is based solely on chance, while investing is based on research, patience, and strategy. You need a lot of money to start. False again. Many online platforms let you start with as little as $10. You need to be a finance expert. Definitely not. With the right foundation, anyone can learn how to invest effectively. To invest confidently, it's helpful to understand what the stock market is. Essentially, the stock market is a marketplace where shares of publicly traded companies are bought and sold. Its prices are driven by supply and demand. For example, if more people want to buy than sell a stock, its price will go up. On the other hand, if more people want to sell than buy, the price will go down. It's a dynamic and exciting system, but one that rewards patience. There are generally two types of investors. Traders, who buy and sell stocks frequently to try to profit from short-term price changes. Long-term investors who focus on holding stocks for years or even decades to take advantage of long-term growth. If you're new to investing, it's best to stick with long-term strategies. These are simpler, less risky, and more suitable for building wealth gradually. Every investment carries some degree of risk, meaning you could lose money. However, by understanding and managing risk, you can position yourself for success. As a beginner, it's important to recognize that taking calculated risks is necessary to achieve meaningful rewards. Remember, risk and reward go hand in hand. The key is balancing them so that your investments grow steadily over time. One of the top lessons you'll learn as a beginner is that patience pays in stock investing. The market might fluctuate day to day, but history shows that it trends upward over the long run. For example, investing $100 monthly in a diversified portfolio over 20 years could grow into much more than the total invested amount, thanks to compounding, earning returns on both your original money and previously earned returns. Investing is most effective when tied to specific financial goals. Ask yourself, why am I investing? Is it to buy a home, retire comfortably, or fund your child's college education? Having clear objectives helps you stay focused and make strategic decisions. Decide on short, medium, and long-term goals and align your stock investments to support them. Before jumping in, make sure your financial foundation is secure. Prioritize building an emergency fund with 3-6 months worth of expenses, paying off high-interest debt such as credit cards. When your financial house is in order, you can invest with confidence, knowing you're protected against unexpected challenges. To invest online, you'll need a brokerage account. Here's how to select one. Look for platforms with low fees and no account minimums. Choose user-friendly interfaces tailored to beginners. Ensure they offer tools like educational materials and support. Platforms like Fidelity, Robinhood, and Vanguard are popular choices for beginners. Setting up an account usually takes under 10 minutes and can be done entirely online. How much money should you invest to start? The good news is that investing doesn't require a fortune. Most platforms allow fractional shares, so you can begin with as little as $10. Start small if needed and focus on consistency. The habit of regularly investing is far more important than the amount. Not all stocks are created equal. beginners should familiarize themselves with these types. Blue chip stocks, well-established companies like Apple or Microsoft that grow steadily over time. Dividend stocks, pay you regular income in addition to stock price growth. Growth stocks, smaller or newer companies that could grow significantly but come with more risk. Diversifying your portfolio will help you manage risk while gaining exposure to different types of stocks. Diversification means spreading your investments across different companies, industries, and even asset types to reduce risk. For example, don't put all your money into one tech company's stock. Instead, invest in a mix of companies from sectors like healthcare, technology, and consumer goods. If one sector performs poorly, others might balance out the losses. Unsure how to pick individual stocks? Consider index funds or ETFs, exchange-traded funds, which let you invest in a basket of stocks all at once. Examples include the S&P 500 Index Fund or ETFs that track specific industries. These options are low cost and great for beginners looking to diversify easily. When investing, research is your best friend. Learn to read company profiles and financial reports. Look at metrics such as revenue, profit margins, and growth trends. Use tools like stock screeners or platforms like Yahoo Finance. You don't need to be an expert. Just focus on understanding the business behind each stock. Beginners often fall into the trap of following media hype or hot tips from friends. Avoid investing solely based on rumors or trends. Remember, successful investing takes research and a level-headed mindset. Stick to your strategy and don't get caught chasing the latest fads. Here are 3 key mistakes to watch out for. Emotional decisions. Don't let fear or greed dictate your moves. Timing the market. It's almost impossible to predict short-term movements. Inaction. Overthinking can prevent you from starting. Don't let it. Consider these beginner-friendly strategies. Dollar cost averaging. Invest the same amount consistently, regardless of market conditions. Invest in what you know. Start with industries you understand and feel confident about. These strategies help you stay disciplined and improve your results over time. Track your stock's performance to ensure your portfolio aligns with your goals. Look at basic metrics like percentage returns, dividend payouts, and total account growth. No need for excessive analysis. Some companies reward investors by paying dividends, regular payments derived from their profits. Reinvesting these dividends can significantly boost your portfolio over the long term. As a beginner, it's important to know that stock investing involves taxes. You may pay capital gains taxes when selling stocks for a profit. Fortunately, tax-advantaged accounts like IRAs can help reduce your tax burden. Market downturns can be stressful, but keep your emotions in check. Remember, temporary drops are normal, and staying invested during challenges often leads to long-term rewards. Focus on your goals instead of reacting to short-term noise. For beginners, it's ideal to focus on the buy and hold strategy, where you invest and stay committed over the long term. However, reassess periodically and sell only when it aligns with your life goals or the company's fundamentals change significantly. Automation is a beginner's secret weapon. Set up automatic contributions from your bank account to your investment account. This builds the habit of consistent investing and prevents you from getting distracted by market fluctuations. The more you learn, the more confident you'll feel. Explore resources like books, The Little Book of Common Sense Investing by John C. Bogle, online courses, and beginner-friendly YouTube channels to deepen your understanding of investing principles. Joining a community or finding a mentor can accelerate your learning. Online forums, social media groups, or local meetups for investors are excellent places to ask questions and exchange ideas. Keep an eye on your portfolio's performance and adjust as needed. Review your progress quarterly or annually to ensure it aligns with your financial goals. Finally, remember that successful investing is a marathon, not a sprint. Countless examples in stock market history demonstrate that staying the course leads to rewards. Even during downturns, don't panic. Investments do recover over time. Congratulations! You've taken the first step toward learning about online stock investing. In this video, we've covered the basics of stock investing, from choosing a platform to developing simple strategies for long-term success. Now it's your turn. Open your brokerage account, start small and stay consistent. Building wealth through stocks is within reach, and every journey begins with a single step. Subscribe to our channel for ongoing tips and insights into investing and personal finance. And remember, your financial future is waiting. Let's build it together.